Hey everyone, this is Robert Keens with goldsilverpros.com. It is Tuesday, November 17th, 2020. I'm about to give you a metals market update here, but I wanted to give an explanation for why I have a different background the last few days that I've had previously is because I'm traveling. I'm out in Austin doing some business down here in South Central Texas. I met up with my good friend Chris Marcus of Arcadia Economics yesterday, and we had a good talk about everything gold and silver market related. So really enjoying my time down here. I'll probably be heading back up to the Dallas-Fort Worth area here pretty soon. But I may end up staying in Austin a little while longer. But without further ado, let's get into the metal report. And there is something astounding that has happened that I want to show you guys that I think you'll be very, very interested in. So it looks like gold and silver have basically been range trading, as I've said. It looked like right around the election time, we had a dip and then we had a strong push forward and then a pullback. And that was to be expected. I do think that there's a lot of support in the market for gold and silver. I think physically a lot of it is being delivered and bought, but I've noticed something going on in December. So, and this happened in September. So we had a potential big delivery month of September. A lot of the paper futures market disappeared from September and rolled into December as the next big delivery month, and now it's happened again, and it's rolling off of December into February. So let's take a look at the CME Group data. Last time I did a video and showed you the gold data. I'm sorry, I'm having a little bit of a scrolling issue. Last time I showed you the gold data from the CME Group, we talked about this big slam down that occurred on November 9th and how that took the gold price down. It basically is all paper market trading. And that was to cover the strong physical demand coming into the market and all of the uncertainty we've had around the election, as well as possibly a second wave of the virus. And so the slam down was to try to keep prices down. And there was just a huge amount of paper contracts being traded on the short side. I showed you that on the settlement numbers. But we had 405,000 open interest contracts in gold for December. And now, about a week later, we only have 255,000. So about 40% of that interest in the December contract has fallen off. And I think it's because we had this slam down in price, and now the price is considered to be controlled in a controllable range. And so now the contracts are moving to February. It's the next battleground month. And we have 203,000 contracts there, where previously we had 70,000. So almost all 150,000 contracts rolled into February. Some of it rolled into April. So you can start to see them rolling forward. And this is the pattern that's going on both gold and silver. We're going to see strong deliveries at the beginning of the month in terms of the physical deliveries. Then what happens is they slam the price down on a day like this right after the physical deliveries come. Remember, physical deliveries occur or can start occurring 2 business days before the start of the month. So 2 business days before the first November trading day, you can start to take delivery of metals. And most of the people that are trading on the market, or the entities trading on the market, want to take delivery early at the beginning of the month. They've already know that they're going to take physical delivery. They need it for their businesses, or they want to have it for their investment. So they come in the first 3 to 4 days of the month and take a big plurality, almost a majority of the metal that's going to be taken that month. And what happens is I'm noticing on about 7 to 8 to 9 days into the month, we'll have a big slam down in price, as we see here in terms of the settlement. So let's go look at the settlements. They have petered off quite a bit, but the settlement data was strong back on that November 9th day for a price underneath the current gold price. Now, what we're looking at in December is it's settling about 1885, so it's 1879, so it's actually slightly bullish for December in terms of the paper trade, but a lot of those contracts have moved off into February, and the same thing has happened in silver. Let's go look at silver as well. Yeah, this big slam down the paper trade in silver I showed you on the last video. The volume, the settlement numbers, and how they were lower than the current price to keep that silver price controlled. And we had about 120,000 contracts trading for the December contract. Now a lot of those down to 73,000. You see a change in 5,000 for Monday's data, yesterday's data. Now we've got about 72,000 for March. So this is this is the pattern of what's happening. People take physical delivery the first about week of the month. Most of that physical delivery is taken then. And then right after that, you'll have this big slam down, a big massive gold and silver shorting, which again, I showed on my last video on the settlement numbers, and you go back to it. Now I can't show it to you today because the goofy CME Group, and this is one of my major complaints, only rolls 5 days. They have a rolling 5-day worth of settlement and volume data. So I can't go back and show you the November 9th slam down, but it is in the previous video. I do have it on video, so go look at that on my channel. But just suffice it to say, that's the pattern that's occurring. So, and I know a lot of my followers have been saying, hey, I'm noticing these patterns in the market. I'm like, yeah, I'm noticing this pattern too. Since we've been following it in detail since July, we've seen this pattern happen over and over again. A lot of physical deliveries at the beginning of the month, price tends to rise. Big slam down occurs right after that first week, sometime after the first week to about the middle of the month. And then it kind of range trades or drifts along for the last half of the month as most people have taken their positions. And we're going to add to that. Now we're seeing people roll it into futures months. If I can get my scroll working here, rolls into futures months, it's rolling off December and now into March for silver and for gold. We'll go down here. It's also not rolling into March, it's rolling to February. So gold and silver have different delivery months. You know, there's only about 6 months each for gold and silver, and they differ. December usually is a big one for both metals, but in this case for gold, it's February, and for March, it's, I'm sorry, for silver, it is March. And that's what we're seeing happening. We actually almost have as much gold interest for the February contracts as we have December. Does that mean that we're not going to get a big run up in price in December in gold and silver because a lot of this open interest is closed? Well, not necessarily, because you could still have a ton of deliveries on 255,000 contracts in gold and on 73,000 contracts in silver. I still think it'll be a big delivery month, but I think a lot of the big players, and we know who they are, it's the ones that are short the most in gold happen to be the bullion banks. So the bullion banks right now are the ones that are shorting gold. And once they successfully short it to keep it in that price range, exactly where they want it, you know, in this 18 to $1,900 price range, you know, they basically get out and they move to the next month and they wait for the build up in the gold and silver price. The good news is that means the gold and silver price is probably going to run up as well. So we're probably going to see a run up. I expect gold to challenge 1900 pretty easily. Silver maybe gets back up into that, oh, I don't know, $26, $27 range by the end of the year, perhaps. And then we'll see what happens. But that's the game that's being played. A lot of complaints on my channel are about, well, they can do this forever. They can do this forever. They can run this big, massive positions in both gold and silver, short positions in the futures, and they can control this forever. Yes and no. Remember back to some videos I did on the physical deliveries and how short we are. I told you how short we are in physical bullion in London and how they're using contracts, the ACE contracts, to back comex gold and silver gold with London gold, and because they're probably running out of gold on the comex, and in silver they're kind of doing the same thing, but what they're doing in gold and silver is they're getting these additional manufacturers they've never had before. They basically doubled the amount of manufacturers of these bars that are coming in to be approved on the COMEX to try to source gold and silver wherever they can. There's all sorts of signs that there being shortages. So what's going to happen is eventually when we have the actual shortages in physical gold and silver, the market's going to panic because people are going to come in the first few days of that delivery month and they're not going to be able to find that gold and silver. Word's going to get out that there's a shortage. What's going to happen is the futures market is going to turn from being net short on those paper positions to being net long. I don't know when that's going to happen, but we do know that there have been a lot of signs of shortages in gold and silver. The reason we can't call a specific month is because I've talked before about how bad the data is in the CME group and how they only give you, like if you look at their physical deliveries, and I won't show it here, I've showed it a bunch of times, but they only give you 1 day's worth of data on the actual stockpiles and they roll it, you know, so the actual stockpiles in the warehouses, they give you 1 day. And if you don't go that day, you don't get the data because it rolls over the next day. They don't give you historical data unless you go buy it and pay them a lot of money. And then the same thing happens in the transactional data. It's aggregate transactional data, but they only give you 5 days worth. And that's really poor. And then you have to have saved that data from previously or pay them an exorbitant amount of money to get it through their block quote system. And so they just don't give you a lot of historical data. Now you can see it on Nick Laird's chart. I've shown you the historical data over time so we can track it. So we kind of know what's going on, and we know that there's not a lot of registered gold and silver left, or there was a spike up in gold and silver here recently, but there's not going to be a lot left if deliveries continue. So maybe it's February, maybe it's April when it runs out, but it's going to run out soon if the existing trends occur. So you guys that are understandably impatient in gold and silver, have been waiting this for a long time, just understand the dynamics of what I just described is going on. I think we're months from this happening, not years. There just isn't enough for the demand. We talked in our last video about how Russia is now buying more gold, not through the central bank, but through their national sovereign wealth fund. And we talked about how other large entities are buying it too. So everybody, the big entities are starting to pile into the gold trade. I also think there's evidence of people coming to manufacture, silver manufacturers to get their silver because there's a massive silver shortage. So we've covered that in previous videos as well. So I think that's what's going on. We're also going to talk about a couple of things that are going on with regards to some news that's coming out, some big names on what they expect is going to happen here in the economy and why this is bullish for gold and silver. We'll pause here just a moment and we'll come back with that video. Okay, now we're back and we're going to play this video. This is Powell giving an interview at the Bay Area Council 25th Bay Area Business Summit. And I want you to listen to what he says here about what's going to happen to the economy. This is on Zero Hedge. You can see the URL up here. You can just search for this. I'm going to blow this screen up and we're going to play what Powell says. Very interesting. Listen to what he says about what economy we're coming back to.
May have taken generations to build. So we got a long way to go. The last thing I'll say is we're not going back to the same economy. We're going back to a different economy, and we can talk more about that. But this economy will be different, and that's going to mean that those people who worked in the service industry, they may need help and support for a time as they find work in new places. So the Fed will stay here and be strongly committed to using all of our tools to support the recovery for as long as it takes until the job is well and truly done.
So that was very interesting comments. You can watch the whole video. It's about an hour and a half. He's got a lot of interesting comments in there, but I wanted to talk about what he just said. He said, we're not going back to the same economy. In other words, we have a new normal, or we're never getting back to what we had before the economic issues of this year and the shutdowns. And he particularly talked about the service economy, which is the vast majority of the U.S. economy is now service and not manufacturing and industrial. That means a majority of Americans are going to continue to suffer. People may not be able to find jobs. And the second part of what he said, or the third part, really interesting part of what he said was they expect the Fed to be committed forever until this ends. And if you didn't expect the economy to go back to normal anytime soon, that could be years and years or forever. Maybe that was sort of a way of saying, hinting at QE forever and easing policy forever to support the economy, to keep the economy from crashing. So what I wrote about 10 years ago in my book, Drop Shadow, The Truth About the Economy, has now come true 10 years later about Fed intervention forever and at the end of this cycle where they can never, the money will never stop being printed, low interest rates will never stop. I think we'll go into negative interest rate territory eventually in the US. I think they're going to put that off for as long as they can, but I think it's coming. I've talked about in previous videos. So we're not going back to the old economy. We're not going back to the surpluses that we used to enjoy in this nation, dating back forever, basically since economic data has been produced in this country. We've been a strong producing nation. We're not going back to that. So that's extremely bullish for both gold and silver, regardless of what's going on in the futures market. So don't get too caught up in what's going on in the futures market. We know that there is a lack of physical in both gold and silver. And we know that they're using the price scheme to keep it down. But once the word gets out to the public, now a lot of us already know this on the inside. We're watching this, that there's shortages and that people are scrambling to get it. And I've shown that to you many times over the last few months. But once the public learns of that, these short paper trades in both gold and silver on the COMEX are going to flip to the long side, and the price is really going to go up quite a bit. Another piece of news I wanted to show you, I got this on Twitter. SoftBank's CEO is talking about in the short run, he's pessimistic, but listen to what he says. This is very interesting to what the SoftBank CEO says about where we're going.
No, as I said, the short run, I'm pessimistic that it's still increasing the second wave or third wave of the COVID-19 around the world. And of course, the vaccine is coming, medical antibodies coming, but who knows, in the next 2-3 months, any disaster could happen. So we're just preparing for the worst. No, as I said.
So he said, anything can happen. We're preparing for the worst. Thinks that we could have a second wave. Is not optimistic about the future there, about what's going on in the economy. So we've seen Fed Chair Powell. We've now seen SoftBank CEO. We're starting to see some very prominent names in business and in finance, people that we should be listening to talking about their perspective on what's going on in the economy going forward. That's only bullish for gold and silver. I mean, that's it's just not something that we look at and say, yeah, this can go on forever. There's going to be a rush into gold and silver. Right now, the physical is drying up. What's going to happen? The physical is going to dry up, right before, at the same time, you have this massive rush as we continue to have these economic problems. That's going to flip the switch on the futures trade, and we're going to see the prices rise. So for those of you that are frustrated with the current action, I get the frustration, but remember, this is the long game. You're in gold and silver for the long game. You're not into day trade this. If you're into day trade this, you go off in stocks and cryptos or whatever paper crap out there that you want to get into. You're in gold and silver for a reason. And the other thing to understand about this is there's going to be great pain when this happens as well. So we don't necessarily want to wish this to happen right away. Well, we want to make sure that we've got enough time to help as many people as possible before these prices spike to get their gold and silver at current prices. So these engineered takedowns of the gold and silver, especially the last one we saw on November 9th in both gold and silver markets, which I detailed in my last video and showed you the settlement numbers and how that paper is used to bring down the price. Take those as buying opportunities, buy the dips, obtain your metal when you can. If you're in the mining stocks, I've been doing a lot of mining stock videos lately to help you guys. Once you have your physical position, you want to go over the mining stocks and take some levered positions to help protect you from the financial storm that is coming and to help grow your estate or at least maintain your purchasing power in what's upcoming some very, very difficult times. So to wrap up this report, I think that things are looking very bullish for gold and silver. I wouldn't worry too much about the futures trade. If you're holding for any length of time, I think you're going to be okay. I do think we're going to range trade a little bit here into December deliveries. I think the first week of December will be heavy in deliveries in both gold and silver. We'll see a nice price spike that may get us above 2,000 through the end of the year. If some of the election worries come back, if there are some court actions, a lot of controversy over how the electors pick the new president, whether this goes to the Supreme Court, those types of things could continue to cause people to go back into gold and silver. I think what we saw with the testimony from Fed Chair Powell and SoftBank CEO agrees with what we said about the long-term effects the shutdowns have had on the economy, and we're really in a deflationary depression. If anything, they're going to have to continue to ease, and eventually that's going to lead to a lack of confidence in the system. At some point in time, as we deflate around the world, we're going to have a debt issue at a bank, whether it be a central bank or commercial bank. I expect it to start in the commercial bank sector. And I've said long time that it'll be a black swan that drives the next collapse in the economy, which I expect to happen probably 2021, 2022 is what I've been saying the last few years. So we'll see if my prediction comes true, but I think that's where we're at. So if you're in the precious metals, good opportunity right now. Keep collecting those precious metals. Look at the miners. If you want to look at that end of your portfolio, don't worry too much about the prices at the moment. The problem for low prices is low prices. And when prices are low for so long and the physical runs out, the prices will rise. So don't worry too much about that. Those dynamics will play out, but just consider yourself lucky that you have time to continue to collect the precious metals. While we wait for all of these things to converge and drive people into the precious metal as a safe haven asset. I don't think it's going to go into dollars and bonds. Bonds don't yield very much. Dollars are weakening, and there are so many of them, and I think people know that, and I think there are other countries who are going to dump them on the market. There's going to be a loss of confidence, and eventually we'll go into that crack up boom phase that Austrian economists talk about. Anyway, that is it for today's report, guys. Until next time, this is Robert with goldsilverpros.com.